Hey everyone, and welcome back to another portfolio update for today. So as you can see, over the past week, the couch investing portfolio was down 3.69%, whereas the S&P 500 was down 2.37%. Today's video, let's go over a couple of moves that I've been making in the portfolio, go over a very busy earnings week, and look at some market data. So let's first start off with the portfolio. Year to date, the portfolio is still up 22%, whereas the S&P 500 is up 6.13%. And since the start, still up 94.79%, whereas the S&P is up 25.21%. Now, looking at the moves that I've been making, overall, the ranking of the portfolio has not really changed much. SoFi still number one here, then Alphabet, PayPal, Rocket Lab, AMD, Micron, Nebius, Uber, Alibaba, Meta, dLocal, Intel. Cash position has been reduced. You will see why. Oscar, United Health, Appcelera, Owlet, Nvidia, and Palantir. Nvidia and Palantir, for those that don't know, this is basically only 2 shares of Nvidia. Every time Jose and myself host an event or a live stream, Nvidia related, I have to buy a share. And this is just 1 share of Palantir, just for the sake of tracking. Now, there are still some companies that are yet to report their quarterly figures. Rocket Lab, AMD, of course, Micron reported a month and a half or so ago. We have Nebius coming up, Uber, Alibaba, dLocal, Oscar Health here as well. But over the last couple of days, I have been adding a couple of shares here and there. I've added 5 extra shares to my Alphabet position. I mean, why not buy Google at these prices? Correct. I agree with myself here. I increased my dLocal position by 8%, same as before, accumulating more shares as the market does not respect this company and its performance. This is a company that is yet to report earnings. I do expect yet another good report. Now let's see if the market is going to focus on the right metrics or not. I then also increased my Micron position by just over 6%. I said HBM is the story that the market is missing, sold out for 2025. And HBM4 is the next growth driver starting 2026. Too cheap not to add, despite what Samsung has told us. Again, Samsung said, oversupply of HBM. But for Micron, which is already sold out for 2025, that doesn't really change much. And they're already working on HBM4. And so, to me, overreaction by the market. Yes, I do know that the memory market is still a cyclical one, but HBM adds a different component to this story. Samsung has been losing market share. Micron has been gaining market share. SK Hynix still the leader. Then I increased my PayPal position just by 4.4% here. Again, undervalued, triple beat quarter. I didn't see much that I didn't like, and so I added more. A day before that, 2 days before that, I added more to SoFi after that overreaction by the market because of the stock offering. Monster quarter, great guidance and comments from management, overreaction from the market to the stock offering. Thanks for playing. I'm very happy to keep adding, even if this is already the number 1 position here. Also added a little bit to United Health. Like I said, I wanted to wait until the earnings report and guidance. Got it. Of course, the stock went a little bit lower. Already talked about that in a different video that will be in the top right corner. But as you can see right here, still is very small, 1.7% allocation, Oscar 1.72. So yes, I am getting exposure to it. I'm already down on both of those names. Oscar will report in the next couple of days, but I don't really mind. It is accumulation mode right now. And even if this is down 17%, it doesn't really impact the portfolio that much since it is just a small position at the moment. And so after all of those moves, the cash position is at 2.57%. I do expect to increase my cash position over the next couple of days with a little cash injection. For those wondering, yes, I still have my YOLO bets in OpenDoor and in Applied Digital and Iron. Moving on to the only market data that I found that is interesting. So the S&P 500, what happens with that after it falls below its 20-day moving average for the first time in over 60 days. We've got some data points to work with. All in all, over the next couple of days and 2 weeks, I'd say, the odds are not really in our favor. But then again, the moves are not that crazy. Rather not that crazy. Of course, it could be that we are going to see the same thing as 1971, where it's green across the board. But as you can see, The odds are not in our favor, but then again, it's not like we're getting hit so hard either. Plus, I mean, we've been going up and up and up over the last 3 months, so a little breather, who cares? Now, looking at the companies that will report over the next couple of days, on Monday we're starting off strong already. After hours, Palantir, Hims & Hers, Mercado Libre, Axon, and Navitas. Jose and myself will be live in the morning and in the afternoon as well. We're not going to stay for the earnings call, but we are going to cover all of these earnings reports when the market closed. Now, what does the market expect these companies to report? Let's start off here with Palantir. They expect Palantir to report $939.4 million for the quarter, representing around 38-39% or so year-over-year growth. EPS-wise, the market and the analysts are expecting 14 cents, and free cash flow, they're expecting around $328.4 million. I do expect Palantir to beat those numbers quite comfortably, and actually I wouldn't be surprised if this will be the first billion-dollar quarter. If it isn't, Q3, Q4 are going to be billion-dollar quarters just based on the full-year guidance that we've got 3 months ago. Moving on to Hims & Hers, revenue expected $552 million, EPS is expected to come in at around 16 cents, and free cash flow for the quarter at $63.5 million. Here it's going to be interesting to see and hear what they have to say during the earnings call, especially with regards to Novo Nordisk. Moving on to Mercado Libre, revenue expected to be $6.66 billion, EPS is expected to come in at around $11.75, and free cash flow is a bit volatile. Free cash flow just over $2 billion. One of my favorite companies out there. I do expect a beat across the board. Moving on to Axon, one of my favorite companies that I do not own. Revenue is expected to come in at $640 million. EPS expected at around $1.46. The range here is quite big, to be honest, for the upcoming quarters. And free cash flow is expected to be around $31.6 million. Moving on to Tuesday. Tuesday is going to be a very interesting day for us, of course. After hours, Advanced Money Doubler, previously Advanced Money Destroyer, AMD, Supermicro, Arista Network, Astera Labs as well. Open Door. Let's see what happens with that YOLO bet here. But of course, the focus for us and the channel, the live stream, is going to be AMD and its earnings call. So let's have a look. By the way, I did make a video about everything you need to know about AMD's quarter. That will also be in the top right corner. But let's have a look again at what the market is expecting AMD, Supermicro, and Open Door to report. So revenue for AMD is expected to come in at $7.43 billion for the quarter, EPS at around 48 cents, and free cash flow at around, well, just under $800 million. Looking at Supermicro, revenue is expected to come in at $5.9 billion, EPS coming in at around 44 cents, and free cash flow of around, well, free cash flow, it's still negative here. The thing is, I'm interested to see what happens with margins for the quarter. Is guidance going to be revised down again, or can we have a revision on the upside? And then the last one for Tuesday, Open Door, revenue $1.5 billion. And yes, as you can see, as the company said, revenue for the upcoming quarters is expected to come down. EPS for the quarter is still a loss here of 3 cents, but there's no point looking at free cash flow right now. EBITDA is expected to be positive for the first time in 3 years. Moving on to Wednesday, and Wednesday is a very busy day, especially in the morning, because apparently, well, they all decided to do this Wednesday morning. Uber, Shopify, Oscar, Novo Nordisk, and Walt Disney. We are going to probably focus, well, during the live stream, we're going to go over all of these reports, but probably only focus on Uber's earnings call. I will definitely make videos about Novo Nordisk and Oscar throughout the day. Uber is expected to generate $12.46 billion of revenue for the quarter, EPS expected to come in at 62 cents, and free cash flow to come in at around $1.83 billion. Of course, there are going to be quite a lot of questions on demand, supply, and autonomous vehicles. Moving on to Shopify. Shopify is expected to report $2.54 billion of revenue for the quarter, EPS of around 29 cents, and free cash flow of $388 million. For For Shopify, it is a free cash flow type of story. Looking at Oscar is expected to report $2.91 billion of revenue, and then the revenue is actually expected to peak here at $3 billion the quarter after that, and then it's expected to actually drop based on the expiration of the subsidies. Now, remains to be seen what happens with that. It's going to be very, very important to hear management comments during the earnings call. We already had the preliminary numbers, so we do want to get as much information as possible from that call. EPS here, still a loss. As for free cash flow, well, there's no point in looking at that at the moment. EBITDA of also a loss here, $204 million. Switching to Novo Nordisk, this is also a company that reports Wednesday before the market opens. Surprisingly enough, this was one of the few names that was actually green on Friday. Here we did already get some guidance, so here as well some preliminary numbers from the company, as you can see right here, so not much will change, but we do want to hear more comments on the earnings call. Last one for Wednesday, and that's the Walt Disney Company. Disney is expected to report $23.7 billion in revenue for the quarter, EPS of around $1.45, and free cash flow of $1.44 billion. Now, after hours, we do have Duolingo that will report. The market is expecting $240 million of revenue, and as I can see, the expectations are for revenue to continue to go up. I do think that the current crash in stock price is an overreaction. EPS of 58 cents and free cash flow of $69.67 million. And then on Thursday, we have Celsius before the market opens, then the Trade Desk, Rocket Lab, and Block, previously Square. After the market close, you also have the likes of SoundHound and Pinterest, Atlassian, Twilio, Take-Two that will report after the market closed, but we're not really going to focus on that. So looking at Celsius revenue expectations, of course, with Alani Nu, revenue of $654 million, EPS of around 24 cents, free cash flow wise, it's still a loss here, still negative $128 million. As for the Trade Desk, a high flyer, of course, nice recovery since, well, the crash earlier this year. I do think that it is very expensive, but it's an amazing company. Revenue expected to be $686 million for the quarter, EPS of around 41 cents, and free cash flow of $96.2 million. Again, I think they'll do well. I think they'll triple beat or maybe double beat, but is it going to be enough? Because a lot of these companies, not just the traders, but a lot of the companies reporting are priced to perfection or trading quite close to it. I'm not talking here about the Oscars or the Novo Nordisk, the one that have been hit. No, but I'm talking about those that are up 100%, 50% or so over the last month or two. Another one of those names is, of course, Rocket Lab, one of my favorite smaller capped companies that have become a bit bigger, of course, over the last 12 months. Revenue expected to $135.4 million. EPS is still expected to be a loss of 8 cents. EBITDA-wise, we should be getting a number closer to, here again, a loss of $31 million. But I do think that for Rocket Lab, it's going to be a good quarter, but it's all about guidance, commentary on the future of the company, more specifically Neutron. Is that still on track for 2025 or not? And then the last one here, a Block, previously known as Square. Revenue is expected to come in at $6.29 billion, EPS of around 68 cents, and free cash flow of, well, free cash flow is not really a metric I should follow that closely to Block right now, $824 million. Now, surprisingly enough, they have seen a nice little recovery more recently. For the year, they're still down quite a lot, but I didn't know they were up close to 60% over the last 3 months. There has been a tiny recovery here. It is, of course, a company that previously was growing much faster than right now. Cash App monthly, for example, have been at around 57 million, I believe, not really moving much. So things need to change, but it's definitely not an expensive name. And then on Friday, we do have Fubo and Tempus, but I'm not going to really talk much about those two companies right now. I think we will have enough to talk about with all the other companies already here reporting Monday to Thursday. So it's going to be another hectic week. And so all in all, that's about it for me in this video. Very, very excited for the upcoming week. A lot to cover, of course. And yes, I am still adding to my positions because despite the fears of, oh, the market might correct itself, I do still feel that there are a lot of names out there that are still worthy of my money. Still a lot of names out there that are cheap, undervalued. And so yes, I am adding. Like I said, you might think this is a falling knife, but to me, a falling knife for a long-term investor in these types of names does not make much sense because it is cheap already today. Can it become even cheaper? Of course. If it does, I'll just buy more. Plain and simple. You might say, oh, but maybe just wait until the stock recovers. Well, I don't know when that's going to happen. Plus, I can give you a perfect example with United Health. United Health dropped to $250. Then it recovered to $310 or so. You might say, oh, buy there. Guess what? We're back below $250 right now. So you see, just buy when you feel the stock and the company is already undervalued. Makes a lot more sense to me. Of course, doesn't work for everyone. If you're a short-term investor, long-term trader, different strategies. So all in all, that's about it for me in this video. Hit all the buttons. We'll see each other in the next one. Bye-bye.